Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to have a little chat about two extremely different views on what 2023 has in store for Bitcoin, plus some latest US data which has come in and given the dollar a bit of a boost. And that's the question: is good news bad news again? And a couple other things which is happening in the market. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So there's two very interesting views which I read over the weekend on two different opinions on what will happen to Bitcoin in 2023. And this is why I've called it love and hate for Bitcoin, because they're totally polar opposite of each other. Now, let's start off with the love first. The love. Now, venture capitalist, a very famous venture capitalist, Mr. Tim Draper, who created or owns Draper Associates, a big investment firm in Silicon Valley, he predicts that Bitcoin will reach 250,000 by the middle of 2023. Now, here's the thing. He originally predicted this outcome by the end of 2022. And obviously, we know that this year has not been so nice to the crypto king. In fact, it's dropped by nearly 60% this year, especially with the new FXTs, disaster and the knock-on effect from that. But this is what he has to say. He says, I've extended my prediction by 6 months. Convenient. 250,000 is still my number, but this is what he's basing his opinion on, which to me sounds viable. Okay, he says, my assumption is that since women control 80% of retail spending and only 1 in 7 Bitcoin wallets are currently held by women, the dam is about to break. In other words, other women or women in general are going to start bracing Bitcoin wallets or e-wallets more. He goes on to say this: retailers will save roughly 2% on every purchase made in Bitcoin versus US dollars. And once retailers realize that 2% can double their profits, Bitcoin will be found everywhere. Now, this does make sense, because currently the middleman of payment solution, or the two kings, is Visa and MasterCard. And they currently charge fees as high as 2%. So his idea and his view of it, like I say, fundamentally is interesting. Now, Draper, like I say, he's a very successful venture capitalist. He made Draper Associates, but he also made very successful investments on tech companies, including Tesla and Skype. So this guy obviously has got a bit of a background in spotting potential opportunities. 250,000 sounds a little bit too high for me. But anyway, let's look at the opposing view, because, he's in love with it. Someone else doesn't like it at all for 2023. And this is the hate side of things. Standard Charter, they believe Bitcoin could crash as much as 70% in 2023, all the way down to $5,000. This is what they had to say about it. They said this: the financial markets surprises of 2023, we feel, are underpriced in by the markets. In other words, all the they're predicting quite a bit of surprise or financial surprises next year, which the market currently is not pricing in. He goes on to say this as well: yields plunge along with technology shares. And while Bitcoin sell-off decelerates, in other words, it's decelerated at the moment after the disaster of several weeks, or the crypto crisis, as we're calling it. And we'll look at Bitcoin at the moment because it's had a bit of a bounce today. The damage has already been done. He goes on to say more and more crypto firms and exchanges will find themselves with insufficient liquidity leading to further bankruptcies and a collapse in investor confidence in the digital assets, a digital asset. And like I say, what you can tend to find with Bitcoin in general, it obviously benefits a lot with risk appetite. Now, whether it drop all the way, that's okay. I'm being trolled again. Hope you're well. I'm one of those bots, I think. That's okay. I've got a girlfriend. Thank you. Okay. Anyway, as I was saying, so yes, I think obviously it has its fans and its lovers, so to speak, of Bitcoin. So like I say, 5,000 does sound a little dramatic, but so does 250,000. But like I say, it really does depend on how much risk appetite we'll have next year, in my opinion. But anyway, let's have a quick look at Bitcoin as it stands at the moment. Right. Okay, as you can see, this is on a daily. It's still pretty sideways. It's managed to find a bit of recovery after falling under an awful lot of pressure, falling under the 16,287 levels, currently trading above 17,000 once again. If we have a look at it now, though, we've had some US data, like I say, which I will be discussing in a bit, which has given the dollar a bit of a boost, and we'll talk about that in a minute. But at the moment, it's currently trading at 17,034. Like I say, realistically, for the bigger picture, for the crypto king, it's got to be 18,438. That's the key level. And that's also at the same time, the 50-day moving average on a daily chart. So that's the key area of interest for me. Anyway, there's two very separate, very different opinions and views on the crypto king. So like I say, we'll have to see. In my opinion, it's going to be obviously how quarter one starts next year and how risk appetite, or how much risk appetite in the market we have. And there's something about that I want to discuss in a minute. But before I get to that, let me just share something with you, which is just as exciting. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. Indeed, just as exciting, maybe not quite as exciting as what might happen to Bitcoin next year, but just as exciting, in my opinion, is, of course, the Tixee Live presents the next episode of the Trading School. This is going to be on Wednesday at 6 p.m. UTC. This topic my colleague and myself will discuss is market sentiment, which I think a lot of people, a lot of traders, especially new to the industry, don't focus a lot on market sentiment. They're too busy looking at technicals and trying to grasp fundamentals. But market sentiment is just as important. So please come along and join us for this on Wednesday at 6 p.m. UTC. Now, like I say, this is going to be a live show, obviously, because Tixee Live means live, but it won't be on YouTube for about 2 weeks or so. So instead, you need to click on the link below in the description below, register and come and join us on Wednesday. So please come along. I look forward to seeing you. All there. In other news, Morgan Stanley's Mike Wilson becomes a bear again. Now, I talk a lot about Mark Wilson on this show because he has been voted the number one strategist year. Don't forget, he called this bear market at the beginning of the year, and he's been pretty much spot on with his predictions. However, over the last month or so, since we've seen a little bit of a rally in the market, he has become a bit more bullish. However, he's gone back to being a bear again, because he said in a note to his investors, we are now sellers again. Now, Wilson believes the key level for the S&P 500 is around 4,150. As we know, we've looked at it several times, and we'll look at it again in a minute, is above the 200-day moving average on the daily. So he believes now it's broken that, it will potentially hit 4,150 points by the end of the year. But then he believes by the end of the year, after that, the bears will start coming back into the market. In Q1 of 2023, we start seeing a sell-off again, potentially, especially with the earning report. He's not the only one, but like I say, he's been a bull. He's gone back to being a bear. He called it last year, beginning of this year. And like I say, he's been voted number one strategist. on the street at the moment. But he's not the only one. JP Morgan, Chase, and Goldman Sachs also see a potential sell-off in the new year as well. Now, something which is happening in the market right now, or has happened in the last sort of 50 minutes or so, and that is good news has become bad news once again. US services PMI was announced higher than anticipated at 56.5 versus 53.1. Again, showing that the market or the US economy is still pretty strong. Pretty strong. Don't forget, we had that really good job number again on Friday, which surprised many people. Now, the ISM services PMI now announced as well, better than expected, goes to show the economy has to go. So obviously, a knock-on effect, the dollar's got a boost. Why? For the time being, on the back of this, the market is thinking, oh, maybe not 50 next week, maybe 75 again. No, it's still going to do 50, in my opinion. And that pivot is a long way off. But anyway, let's have a quick look at the market, see where it stands at the moment. So let's start off with, let's go with the single currency, the euro, on a short term. So this is when the information or the data was released. As you can see, it was trading above the 50-day moving average. After that, it did fall under the 50-day moving average on a 30-minute, currently trading at 1.05355. So yeah, I did see a little bit of dollar strength. It seems to be a little bit, well, it's off the lows of the session. But in my opinion, if you look at it on a bigger picture, on a daily, again, the sentiment is still fairly bullish at the moment. So this is possibly a knee-jerk reaction to that initial ISM services PMI. But like I say, we've seen a little bit of a dollar fight back in the US session. Key area for me, though, for the euro, for the single currency, potential area of interest, 1.06017 for potential resistance. And again, key area for me is that 200-day moving average on a daily, 1.03882. Sterling, same story as well. Again, okay, on the day, slightly under pressure on the back of the ISM manufacturing, still above that key level for me, though, that 200-day moving average as well, 121.092. S&P 500, again, this looks set for a third day of losses, but still trading around that 200-day moving average, which is holding it, which is round about what key area for me is, of course, 4,019 points. And, of course, the yellow metal, same thing, capped all day at that $1,803, also under pressure again for the day. Looks like set for a second day of losses, $1,776 currently. Key area for me is the 200-day moving average, $1,759.59. Well, we go on to it. Let's follow up on the story we were talking about this morning about oil as well. Oil, like I say, is still holding high. It did go above $81 a barrel, currently now under pressure because of that ISM manufacturing again, and obviously the idea of the Fed pivot not happening now. But I still think, again, the market was kidding itself on that anyway. Currently trading at $80.26. So there we go. Other things that happen this week, of course. Other major events to come: Reserve Bank of Australia interest rate decision, Australian GDP, EU GDP, Canada interest rate decision, and the consumer sentiment. But in my opinion, this is just a build-up. This week is just going to be a tease for next week, because next week is going to be huge. US CPI, UK CPI, and of course the FOMC interest rate decision, all happening next week. But still, this is going to be like a little sort of teaser and the build up to what potentially could be a massive week next week. The market, or the US equities as they currently stand, S&P currently trading in the red slightly for the day, 0.95%. Nasdaq the same, negative 0.89%, and US 30 currently trading negative 0.69%. Don't forget, you can ask me questions anytime you wish. Don't troll me, but ask me nice questions. Or simply say hello if you like. Not a problem. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow, around about 9:30 a.m. UTC, discuss the European session, probably discuss what's happened in the Asia session as well tomorrow, and any other breaking news or latest developments. Okie doke, okie doke. If there is no questions, not a problem. Not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, we're at top of enthusiasm for the markets, I simply cannot help then give me one of these. It's nice to know that you like what I do. Anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.